Hello everyone, welcome to Chill Dill Trades. Welcome back if you're here for the second video. If you're here for the first time, welcome to the brand new channel. Uh, Basically what this channel is I kind of break down what's happening in the markets, as well as break down what's happening in some of my favorite stocks. We look at kind of the valuations, maybe where they're at today, as well as breaking down the charts in a technical way. And so today we're going to talk about Alibaba. It's definitely a stock I'd say a love-hate relationship with, where I love the company, but I hate the price action and the chart. So it's kind of in a weird place, and I think a lot of people feel this way about Alibaba. There's a lot of people who love the company, but just aren't sure about the stock and the charts. And so I'm just going to kind of break down both how the company's looking at a valuation, as well as in a technical part from the charting. So where I want to start out this video is just kind of looking at Alibaba as a company overall, its valuation. So yearly revenue last 12 months in USDs is $717 billion. That's a humongous company. Of that 17, I'm just gonna say 117 billion. Of that 117 billion dollars in revenue, 150 billion is net income. That's a pretty good margin for this really big company. What is that? 150? That's like 30% margins or so. That's a lot of revenue. That's a lot of money that this company's making. When we look at the valuation, we see the market cap of 588 billion. So the market cap is actually lower than the yearly revenue. This stock honestly is kind of priced as a value company. They don't have a dividend, so obviously that's a drawback with a company this big, but they're growing like crazy. Year-over-year growth, we'll get to it in just a minute, but this company is growing like crazy. And so for its market cap to be lower than its yearly revenue is a telltale sign that this price is way lower than it should be. Now what I want to do is compare this to Amazon. So for some context around Alibaba, a lot of people like to compare it as the Amazon of China. They have e-commerce. They have a lot of other side businesses under their umbrella that they own, but predominantly it's an e-commerce company along with some other things. So Amazon is a great company to compare Alibaba to. So when we look at, nope, wrong one. So when we look at Amazon's valuation, so Amazon's market cap is 1.6 trillion, but its revenue is 419 billion a year. So just like we looked at Alibaba. Alibaba makes $717 billion a year, but its market cap is a third of the price. Okay, something's weird here. So that either means that Amazon is way overvalued or Alibaba's super undervalued. It's one of the two. My preference is that Alibaba is undervalued, but let's look at this a little bit more. So of that 419 billion in revenue, 27 billion is sorry, did I just say the wrong thing? This company is, no, that's right. Okay. This company does make more money than Alibaba on a net income basis, but there's a couple factors that are leading to that. So one of the big things that happened to Alibaba is they had some regulation fines from the government. I think they fined them like $2 billion-ish, if I remember correctly, and so that definitely pulled back their net income for the year. So these companies, I would say, it looks like Amazon has a little bit bigger profit margin, so it makes a little bit more net income. But Amazon's market cap is 3 times as big, but it's a smaller company. That's like the easy way to put it. Amazon's valuation is 3 times as big, but it's half the size. Just about half the size. That's crazy. So something's off here, and so we're going to dive in some more to kind of figure out maybe why the price isn't reflecting the value that I think Alibaba has. So let's go on to just a quick look at the charts of kind of understanding how Alibaba has performed compared to Amazon and the QQQ, which is the Nasdaq ETF. So right here we see kind of a transition point where Alibaba was performing pretty well, through the first half of 2020 after COVID crash, alongside both Amazon and the Nasdaq. So it's kind of in line. But then we see this divergence around in the mid-November of last year. This is kind of when all that news came out about Alibaba with, Jack Ma going missing. He kind of hates on banks, is the easy way to say it. And then the government was like, "Hey, we don't appreciate that. We're going to do a bunch of base regulation. We're going to kind of jump into your business and see what's going on." Um, they halted the IPO of Ant Group, which is a company that Alibaba owns. And so with all that kind of drama happening with the company, the market got really scared, as well as when Trump was still president, he was like, we're going to ban all Chinese stocks from the stock market. So all these things just put a lot of fear around Alibaba, and that's where we see this divergence where Alibaba just has basically gone down since November, but Amazon and Nasdaq, we still see somewhat of a trend upwards. Let's go next to kind of Alibaba's numbers. So I believe these might not, yeah, these are not in dollars, but actually, I'm not sure if they're in dollars or not, but let's just look at the growth. That's what we're looking at. So when we look annualized year over year, look at this growth. So in 2017, 158 billion, 4 years later, 717 billion. That is insane growth for a company. Insane growth. And when we look at the quarterly, we still see the company growing pretty significantly. So in Q4, they have a little different calendar. So Q4 is actually the first quarter of 2021. It's a retail calendar. We see revenue actually grow 63% year over year. 63%. That's insane. Obviously, China got hit a little bit earlier with COVID, and so their economy shut down. So maybe this is, compensating for some lower sales potentially right when COVID happened. But still, 63% year over year. When we look at Christmas, 36%, still 40% growth year over year. For a company worth 500 billion or half a trillion dollars, for this company to see 30 to 40% growth year over year, um, is really, really insane. And that's why kind of this valuation company just doesn't make sense. So let's dive into maybe where I see some of the issues. So one of the main issues to me is the institutional selling that's been happening. So as the stock has kind of climbed since the IPO a few years ago, we see a lot of institutions buying and more institutions buying than selling. This is most of the time a really good sign for a stock. That means that typically the stock is going upwards. Sorry, everyone, my nose is super itchy. But this typically is really bullish for a stock. That means, the people who really, I would say, project the stock upwards are buying a ton of shares in the company. And we kind of saw that for 2 years, 2 years and a quarter. But then COVID happened, all the drama, COVID, people got scared. And then they're like, wait, it's okay. So they started buying again. But ever since all the regulatory news came out, since all the investigations from the Chinese government into Alibaba, the stop of their IPO of Ant Group, you see really large selling. So the first quarter, huge selling. Here you just see a kind of a flip. So before, more buying. Someone's messaging me in Discord. More buying than selling, but then you see more selling than buying. So that's not a good sign for this company. This tells me that institutions are still uncertain or unsure about this company. The fear might still be too much in the air for this company to make any dramatic moves back to the upside. But let's look at what the charts are telling us. So just going back, I think this is a 4-year chart. So 4-year chart, I think the stock IPO'd a year before this around 80, 90 bucks. But basically from the IPO, we see an uptrend. We see a pullback in the market. 2018, but that's when there's a little pullback in the market back then. But basically since that overall market pullback, it's been in an uptrend. Obviously, we see the COVID crash here. Yep, that's COVID crash. But then from COVID basically to August, September, October range, we see the stock going up with the rest. But then at this peak is when all the regulatory news came out and a lot of fear in the market. And that's where we just see kind of the technicals turn around on us. That's not a good sign. So, through here, a little bit of wishy-washy here, but like I've mentioned in the other video on my channel, go watch it. I do analysis on Ford and GM and where I think they're headed. A stock's in a positive, direction when we see the 100-day SMA, 200-day, 100-day, and 50-day stacked in that order. That typically means the stock is in a bullish trajectory to the upside. And then with that, we can kind of line it with trend lines to prove the fact that we're in an upward trend line, or in an upward movement for the stock. So we see these stack the correct way. We see a trend line telling us it's going higher in the long term. But then obviously we have the peak here, and that's where things kind of go to shit. And we've still had, the stock has still had a hard time breaking out of that downtrend. So as you can see, of this more long-term downtrend, let me go a year or more because I think there might be another, yeah, there's another trend line we can draw for some more context around some points. So one little tip, the longer the trend line, the more impact. So if I compare this really long trend line to the shorter trend line, this one's always going to stump it. That's the thing that you need to remember. The farther back, the more impact it has on the stock. So we did, we can kind of see here, as it always happens, we did see it test a trend line. It bounced off pretty significantly, but then also it formed this downwards trend line. And that's kind of the momentum that we've seen in the stock since November. As we're just talking about the SMAs, let me zoom in so you can see easier on the YouTube video. But as we can see, the SMAs have flipped to the opposite. So instead of 200-day, 100-day, 50-day, it's now flipped around. And so when we see it flipped around and above the current price, that's a very bearish sign for the stock. So when we look at big picture macro, this stock is still not in a really good place. Could this be like a temporary bottom and we might see another acceleration like we did here in this range? That might be the case, but we'll just have to see if we can break outside this downwards trend line. Because for context, if we draw a line here, that's what we saw here. We saw, it consolidate, kind of similar to here, some consolidation, and then we saw a breakout once it broke this downwards trend line. So we'll have to see if we kind of see something here in the next couple weeks. My prediction is if we see the NASDAQ break all-time highs, we will see the stock break out a little bit, but it doesn't change the overall fundamentals for the stock as of now. A couple other issues with the chart currently is the RSI. So on the daily, the RSI hasn't been able to break above this 60 level. Basically, when did it try to touch it? It broke below 60 at the peak, and it hasn't been able to break back above. And so let me compare this to when the stock was bullish. So when we see the stock bullish, we see it hovering from this, say, 70 range to this 50 range. So it's kind of, I would say, just kind of going back and forth, and you see the stock just melting upwards. But on the negative, we see the stock going below 60 and kind of that 30 to 60 range. So it's the opposite, and we see the stock making the opposite movement. So instead of melting up, it's melting down. And so we still haven't seen, I would say, until we see this break above a 60 RSI, again, another indicator that the stock is still on a long-term downtrend. Let's draw a couple more points on the chart just so we can see if we can find some more evidence of maybe where a bottom is in the stock, potential more downside in the future. So right here, basically where this, pretty close to where the stock bottomed out, ironically enough. That's something you'll find as you start charting more and more, is things are never coincidence. They always line up. So right here, back in 2018, the stock tried to break out once, 2, 3 times, couldn't. And look where we came back to. We came pretty close to that mark, but we hit this trend line instead. And then we actually tested it here. And so if we hold, I would say this about $205 mark, that's really good sign for the chart. That means we're going to hold what was really important resistance in the past and now really important support. We also see a lot of consolidation around here, so these are all things we want to pay attention to. If we do see the NASDAQ break out of all-time highs, I would say the max range we have is maybe 240. I would say the max upside we have is around 240 to 250 for this stock. I don't see Alibaba breaking much higher than that, but draw your lines, see what we have here. 205, really big support. We also have this descending-ish triangle around the $200 mark, so if it does come down a little bit more, these are areas that we're going to want to look at as all these trend lines kind of collect in the same area. But I want to end it there because the video is getting long. So I really appreciate you watching. Thanks for coming back if you did. If you're here the first time, please like and subscribe, and I'll talk to you again soon.